Hi guys, welcome to our overnight session review for today. We're going into Friday, pretty much end of the week. We were anticipating basically everything here. Monday, Tuesday holding pattern, Wednesday OLR, beautiful run. 13.4 has been hit, but I don't remember if I said this on the last call or just in Telegram. I'm open to the idea of 13,500 being traded to because it's a mid-figure level. There's nothing significant about this level besides the fact that it is that daily down candles low. So I'm open to the idea of 13,500. And to be clear, I'm open to the idea of this guy trading higher until next week Wednesday. So for the most part, it's neither it's done whatever or everything we would want it to do, and it's now us enjoying the fruits of our labels if you took the trade and just chillax. So that's H1. Jump into M5, make this one short, spicy. We had our overnight session right here. So since yesterday, I introduced the idea of being a little bit more aware or cognizant of the price action that you're trading and don't just make it into a pattern of sorts. Overnight session right here is efficiently traded. Because it's efficiently traded, your main focus is where is the liquidity? Order flow is bullish. This is an imbalance. We have lows and imbalances on H1, so H1 FEG right there. Which means you're coming into the market thinking, okay, cool, we have overnight session low right here, resting on top of an old imbalance. We know from ICT, if you have a low and an imbalance, those are the best lows to buy. So came into the market with a bullish bias today. This happened. I could see that they would likely trade down here, but I just didn't want to be a part of this sell. It didn't feel comfortable for me. So I watched this play out and I started going long inside here on an M1 time frame, I think. Yeah. Like my first entry was below this up candle at 840. That low, when we traded down inside here, I started going long, very aggressive. Played about 10 points here, came back on an M1 order block, and I went long again there. So it's really nice. And I didn't like the fact that we weren't expanding above this candle. So I got taken out break even after partials. And then after this guy traded down here, M1 CSD went long, targeting overnight session high. Beautiful run. Reclaim the order block right here, specifically this candle, because this is overnight session low. This is the candle. This is a big candle. So if you follow the last call, I think, or the one before, I mentioned that if the order block is a big one, just grab the body of the order block, split it in half, and you focus on 50%. Nice confluence, old low, equilibrium of an order block, consolidation, this down candle right here, beautiful, and then price ran higher. And that concluded the day. So this was the last trade I took for today. And yeah, so pretty straightforward for this day. This delivery is something you've seen a lot, this specific delivery. And I'm imploring you to screenshot your M5s and journal where your setups form. It's the only way to stop trading a pattern and instead start anticipating a delivery. Little bit of play on word, but it's very different. A fractal is, or trading a pattern is just thinking, it takes a low, I'm gonna go buy, or it takes a low, I'm gonna do this. Anticipating the delivery is saying, whenever it looks like this is where the opportunity forms. This opportunity will form if it does this. So my plan for today is when I go to the market, since the order flow is bullish, I'm going to wait for this, step 1, step 2, CSD, and then enter here. I got a lot of questions recently about what is CSD. I'm going to try to put it into words again. CSD means a change in the state of delivery. It's that point when you anticipate the market to start reversing. So not like turtle soup where you want to buy down here. CSD is, if this is liquidity and market makers are trading into sell side liquidity to buy, what are the signatures that confirms that this is actually happening? And how do you know that you're not form fitting logic just because you want to be in a trade? For me, to answer that question, I say, okay, cool. Order of delivery. If the market makers are buying, I want to see them take opposing liquidity, show evidence that the market structure is shifted, which would be the candle that takes liquidity and closes. Just trade through that high. Doesn't have to be a close, just trade through the high, and I'll buy retracements inside it. So if I'm aggressive, this would be something I'm buying. If not, it's a big order block, stick to the rules, 50%, allow this to miss you, it's fine. You got paid here. So CSD, change in state of delivery. The OB model is the embodiment of a change in the state of delivery. And that's why it's so beautiful, because it tells you when to go in after liquidity is taken. So I can go long here comfortably, knowing that all the sell side liquidity against my position has been taken. So if I want to put a 50-point stop here just to soothe my mind, yeah, sure, 50-50. 50-50 mean 50 stop loss, 50 take profit, which is madness. I think 20-50 is the best ratio. But yeah, so nothing exciting about this delivery. We anticipated this weekly profile. It's playing out perfectly so far. Journal what the week looked like on H1 and how each day played into that. And we'll review maybe Saturday, or I'll just do a new weekly outlook on Sunday. So again, thank you for all the love and support, especially on Patreon. Thank you for continuing to watch me ramble about price action. Do enjoy the rest of your day, guys, and see you tomorrow. Toodles.